All right, welcome back into a Market Day Report. I am Scott Shelby, otherwise known as the Cow Guy. Thank you very much for tuning us in here this morning. And if you've been with us all day, that's great. Hopefully we're bringing you some fun and informative news to help to make you stay. Let's take a look and see what corn's doing. We were just a tad better last time I checked, and that seems to be the case here. Actually, it looks like we're losing a little momentum here, a little mojo. March is up a quarter, that's one tick, 654 and a quarter. May's up a tick to 654 and a quarter as well. And now July is up a tick to 648 and a half. New crops 591 and a half. That's going to be the D's. It's all kind of just a tick or two this side of unchanged. So not a lot happening there, but it does seem to be slipping down a little bit. How about soybeans? The front three are up. That's 7 cents higher in Jan. That's 1508 and a half. But look, 1.25 cents higher in the March to 1493 and 3/4. May is just up a tick, 1498 and 3/4. And we do see July and August off a penny and a quarter and 2.5 cents. Respectively. So the fronts are up, the backs are down. Wheat, this is Chicago wheat, 8 cents higher in the front three, maybe even the front four. March is up 8 cents to 751 and a half. May is up 8 cents to 759 and a half. July is up 8.25 cents to 764 and a half. There you go. Hard red wheat in Kansas City. Let's take a look about the Kansas City wheat's up about 4 cents. March is up 4 to 836 even. May's up 4.5. 832 and a half. There you go. We got a 6 cent rally in July. And we'll take a quick trip over to spring wheat in Minneapolis. 4.5 cents higher on that front month. 906 and a quarter is last. May, 902 is last. That's up 6.25 cents itself there. All right. And then finally, let's take another peek into the cotton market. 159 points higher in the March to 87.27 as we kind of lose a little bit of steam over there off of our earlier highs. All right, let's bring in Todd Horowitz. He's with Bubba Trading, and he joins us from Las Vegas. Thanks for being on the show here. It's been a while because we haven't had you on. This is the first real Monday of the year, so we can say Happy New Year. I think it's still legal, but it's good to have you on because it wasn't going to happen last week, was it? So, what are your thoughts here? We have a report, obviously the 12th, I think it is, right?
Yeah.
What has anything really got your attention here as of late?
No, I think that we're kind of in the paint drying watching mode right now. I don't think there's much going on. It's pretty quiet. You know, it's interesting, Scott. The fourth quarter was really quiet, and as you and I both know that from the floor trading days, the fourth and the first quarter were the busiest quarters. And so far, the first quarter has been pretty much of a bust so far, and the fourth quarter was horrible from an action standpoint and a volume standpoint. And I think that we're really looking at a big market in the commodity space in general. I mean, if you look at the softs today, they're flying higher: cotton, cocoa, sugar. And I think that the grains are going to follow. You know, we have a real mess with where we are and what we think. And we're being given, I think, a lot of bad information that is kind of holding down prices. But I think as you go to the grocery store and you spend your own money, you find out how expensive things really are.
And so, there are we've had a lot of analysts on actually since the beginning of the year, and a lot of them are worried about what the Fed could be doing to the economy, what the Fed could be doing to the consumer. Does the consumer have enough money? We're going into things at a pretty high price, if not the most expensive crop we've ever put in the ground in this spring. They're worried about what could be maybe lower prices after shelling out a lot of cash in the front here. Are you? You don't seem to be sharing those concerns. You seem to be still
I'm
bullish.
not concerned about that. What I'm really concerned about, Scott, is that the Fed and the government really does not allow the free markets to work, because you and I both know that interest rates in there at 1% and 2% were not the right price either. And if we would let the markets price themselves and go to a demand side instead of a supply side, we'd be in a lot better shape. You know, the Keynesian economy system we run off of is trying to keep businesses in business that don't belong in business. And that's what I think is really hurting the overall economy, which then really hurts the farmers, because everything starts with food. Everything starts with we got to eat to get fuel to go for the day. So I think there's a lot of issues, but I really do believe that we're going to have a big market this year, and I think it's going to come out of nowhere. That's what I'm looking for.
All right. Stay right there. That sounds good to me. Stay right there, though. We're going to go away. We're going to take a break. We're going to go back and talk more with Todd Horowitz, Bubba Trading in Las Vegas after this. All right. Welcome back to Market Day Report. Let's take a look and see what we've got in store for these livestock prices. Let's take a look at the proteins. If I go down and click on the proteins, that's how technology works. That brings me up a protein board here. That's live cattle in Chicago. Pretty much up $1 across the board, isn't it? Like Feb's up 95 cents to 157.75. We got April up $1.02 to 161.70, and we're up about $1 to $1.05 going all the way out to the deferred. So a quietly better board there when it comes to live cattle. Let's take a peek at feeder cattle. What do we have happening over there? Well, we're higher as well. Jan's up $1.05 to 183.75. We have March right behind it, up 72 cents to 186.37, and an 85-cent gain in April, 190.67. For those of you that are trading all the way out in April, I don't even know what's going on in April. So, how about lean hogs? February 37 cents higher, 80.65. April is up $1.10 in the Chicago lean hogs. That's at 90.75 last in the April lean hogs in Chicago. It's going to give me the opportunity to bring back in Todd Horowitz. He's been waiting so patiently in the wings here. He's with Bubba Trading in Las Vegas. Todd, anything stick out at you when you look at those livestock prices?
No, I think we're kind of really just stuck in that same old range. You draw a band or a line around them, go back to your geometry class and draw a big rectangle, and I think we're going to trade up and down based on what goes on with oil and based on what goes on some other things. I think it is interesting, though, that feeders have started to pick up a little bit of steam this morning as they were pretty much flat, now up about $1 when corn was higher. But overall, I think that this is really a budget and an economy standpoint, and they're pretty highly priced, right? I mean, I don't know what the exact input cost to create feeders or fats from the beginning, but I think we're in pretty good pricing and pretty fair pricing from what I can tell. And I don't see a lot of things here that are going to drive them lower. I just don't think there's a ton of room to go to the upside either.
Yeah, I mean, there's a lot of folks expecting, when we come to cattle, the cattle going up in price because of the tightness. But, I just have to be careful about getting too much out over your skis because there's no for sure thing out there. And look what happened to cotton when everybody thought that was going to go through the roof, and we went from 145
I do
to
understand
70.
one thing. I don't know if we have time, but I did hear from somebody that told me that there's fat cattle is going to slaughter a lot faster because they can't afford to feed them.
Yeah, well, we shall see. All right, that's great stuff. Thank you very much.
Thanks,
Todd
Scott.
Horowitz, he's with Bubba Trading. He's in Las Vegas. I'm going to bring it back here to Nashville. So if I can throw it over to, there she is, Janet.